Hello and welcome after break. You're watching Markets at Noon with me, Ankur Mishra and Mansi Dave. And let's take a look once again at markets continuing in the red territory. But more importantly, the stocks which are in declining mode are outnumbering the advancing ones. And whether you talk about IT, auto, or all the sectors which were actually taking markets up recently, including banks, are in declining mode today. And more importantly, even the profit booking is there in the Adani stocks, which you saw in last couple of days. But markets will go where from here? To understand the same, we have Sandip Agarwal, fund manager, Sowilo Investment Managers. Hi, good afternoon. So what is your sense of market now? Which theme will play out? We have seen the consumption themes already playing out in market. IT is something which is on a drag consistently, and it is not just about the news which has come right now, but the whole year the sector has underperformed. So what is your sense of market? Will the consolidation phase continue more than anticipated?
Yeah, hi, good afternoon, and thanks for having me on the show. So, we have very clear strategy which we have been working on for last 2-3 years, and with God's grace, it has done phenomenally well for us. We believe that India is a game where 140 crore population is there, and that's the reason if you see for a couple of decades the FMCG did extremely well because there was an automatic population growth, and that growth was leading to volume growth and some pricing improvement, and the stocks were doing phenomenally well. I think this has started going down in last few years because our population growth rate has fallen from 1.5% to now 0.84% in last 2 decades. That has been the fall, and even the fertility rate is below now the replacement rate, and because of that we have lost love for FMCG. In last 2 years we are not there in FMCG. Now we are trying to play what could be the next game with this population, huge population benefit and the demographic benefit which we already have. So we have moved very aggressively towards platforms, whether it is in the financial intermediary space or it is in the delivery space, logistics space. So we believe that platforms are the very, very good play to play the strength of the country, and we honestly see the big techs coming out of the platform space same way what has happened in the US in last 30, 35, 40 years. And we are ultra positive to play every theme through platforms and also the capex theme. So these are two basic themes which we are playing.
All right, so the themes on the radar and the basic ones. But then where do you see a re-rating and de-rating in the market? Sandip, hi, good afternoon. Mansi, this side first of all. And also having said so, the next big trigger will be the earnings season which we will witness. So how do you see the earnings season panning out this quarter?
So I think, we have already underperformed in a big way the emerging markets in last 1 year. And because of that, and that is primarily because of multiple factors, uncertainty at the global level. And also, the earnings have not come in last 2-3 quarters. But I believe that, this is the quarter where you will start seeing bottoming of the earnings and much stronger commentary going forward for the outlook side. And that is the reason we believe that, markets, despite all this problems which we are facing on the global front, I think from this quarter earnings on, we will see markets again starting to move up, and we are very, very constructive on the market going forward. I think we have gone through the pain of correction, time correction and absolute correction. Both we have massively underperformed most of the emerging market, and I think that with earnings recovering back, we will see that reversing slowly.
Right. Request you to please stay with us because an important news update is coming in, and you can see that shipping sector stocks in focus, especially SCI, up more than 1%. And why so? Because cabinet meeting is underway, and cabinet is likely to approve 3 schemes for the sector with the financial assistance of more than 65,000 crore. My colleague Prakash is joining with more details on this story.
It's a big day for shipping sector as Union Cabinet likely to approve 3 flagship schemes to develop an entire ecosystem where shipbuilding, infrastructure, along with some financial support that will be provided to incentivize overall ecosystem in the shipping sector. Sources are indicating that the schemes such as Maritime Development Fund, Shipbuilding Financial Assistance Policy, along with shipbuilding cluster likely to get cabinet nod, and financial assistance of approximately 65,000 crore to 70,000 crore may be granted. Along with that, Expenditure Finance Committee has already approved financial assistance for these schemes, and you are aware that the Finance Minister has already announced this scheme in the last budget, and now process has been initiated to give final approval to these schemes. The Prime Minister himself announced this scheme a few days ago, and now government is ready with the final proposal that will be put up before the Union Cabinet for its approval. A very significant development coming in, where the government is well set to provide financial assistance for shipbuilding, developing infrastructure, and develop entire ecosystem. A very significant development coming in.
So 3 shipping schemes to be approved, a very significant development. And Sandip, since you were listening to this entire development in shipbuilding space for that matter, Shipping Corporation of India at present, if you see, the stock is also performing positively in trade, and this news in itself is positive for the entire space. What's your take on the same?
No, so shipping industry has long been overlooked by the investors, and people have not been willing to invest because of 2 reasons. One, the final derivative, which is the freight rates, they are very, very volatile and dependent on external factors. And secondly, this is a very high capex consuming industry. And if you see, for example, the vessel rates, quickly double, triple, and then they come down also very quickly along with freight rates. So, and when you are committing to the asset, it is for 20 years, 30 years. And secondly, you are generally buying a second-hand asset because the new ones are insanely expensive. So I think, there has been lack of interest because of that. But with the government's focus, and government is rightfully doing so, if you see a few days back, Prime Minister has mentioned that 6 lakh crore rupees we are paying in terms of freight, which is itself very, very big business. And if we invest domestically, it can be a big industry. So I think a superb, initiative by the government, and also this can be really, really a big industry going forward. And the amount of money which we are already selling out for freights, that is itself so big. So one, it can come down. Secondly, it can create a lot of opportunity for the indigenous industry. So we see this as a very big positive.
That's quite an insightful view coming from you, and Sandip, requesting you to still wait because there's another news flow which is quite interesting. Swiggy has fully divested its 2,400 crore stake in Rapido, selling shares to Dutch investment firm Prosus NV and Westbridge Capital after more than 3 years as an investor. According to reports, the exit now values Rapido at $2.5 to $2.7 billion, delivering a near 2.5x returns, 2.5 times returns for Swiggy. Snehi is joining in with more details on the same. Snehi?
Well, yes, all eyes are on the stock of Swiggy today on the back of 2 major news flows that we've heard from the company last evening. First, the transfer of the quick commerce business Instamart from the parent company to their wholly owned indirect subsidiary, which is Swiggy Instamart Private Limited. So it's an internal transfer over there, and this transfer is expected to be completed post Q3 FY26. The second biggest news flow here is Swiggy looking to offload its entire 12% stake in Rapido, and it's going to be doing the same for 2,400 crore rupees to 2 of Process's units, which is Westbridge Capital and MIH Investments 1. Swiggy, remember, had invested about 1,000 crore rupees in Rapido all the way back in April of 2022, and this is almost a 2.5%, or 2.5 times rather, return coming in on Swiggy's investment in just a matter of 3 years. So rather profitable investment for Swiggy, Rapido has turned out to be. Now, why they are doing this? Remember, in Q1 con call also, Swiggy had warned that Rapido is looking to foray into the food tech service, food tech services, which is a direct conflict of interest and a clash with Swiggy's services, which is why they're looking to offload that entire stake. What this will do to Swiggy's cash balance: at the end of Q1, Swiggy had about 5,354 crores of cash. Now, this addition of 2,400 crores will happen, and Elara estimates this total could come up to about 6,500 crores if you factor in Swiggy's quarterly cash burn rate. Elara also believes that this will give Swiggy the war chest it needs to compete with rivals like Zepto, Eternal, the newer entrants, and also worst case, Eternal says this could last Swiggy for the next 5 quarters, this amount of cash. On the flip side, what is happening to Rapido's valuation? Swiggy's sale for 2400 crore more than doubles Rapido's valuation compared to what we had seen in 2024. Because remember, for 12% stake amounts to 2400, a 100% stake could come up to 20,000 crores, which is more than double that 8,876 crore valuation that we had seen in 2024. Lastly, in terms of brokerage view, Eternal continues to be bullish, maintain accumulate target price at 450. Nomura also maintains at buy rating, target price at 550 rupees per share. So all eyes are on Swiggy on the back of two of these major news flows.
All right, so news flow in Swiggy. Sandeep, I want to understand with you the whole sector, because there are two stocks which are currently in the sector, quick commerce and food delivery. Of course, Swiggy as well as Eternal. What story will be playing out in these two stocks particularly, and the entrants which are threatening the position in 1 to 2 years?
No, we used to hold Eternal earlier in our PMS. We don't hold it anymore, but we hold a good position in Swiggy, so the disclaimer is required. But I would say this, that, I have been tracking platforms like Amazon from almost last 25 years. And let me say this, that, platform businesses have very high operating leverage. And once you start making money, so to give you an example, Amazon started in 1997. First money they made approximately in 2015. But by that time, the market cap went up by more than 200 times. And, after 2015, while Amazon's profit have gone up by 120 times, market cap has gone up by only 8 times. So this companies, the most important thing is how much money you have there to burn. How can you accelerate that? And, how quickly that burn can come down. So, the rate of burn has to be lower than the rate of incremental growth. That is where you make the maximum money. So we had Eternal from almost like bottom, and we sold it at a very good price, and then we flipped it to Swiggy. And the reason was that, Eternal's burn rate is now coming down to almost zero. So from here, the numbers will do well. The PAT and other things will go up substantially. But, we don't know how much market cap returns will be there. But we believe in Swiggy. Now the burn rates will come down. They have the war chest, and they have done a great thing in my view by selling this Rapido stake, because this give them additional war chest to fight. And I think when the burn rates will start coming down, that is the time when the maximum value will be created. So we believe both are great businesses, but we are biased towards Swiggy, and we hold it in one of our schemes.
All right, so positive conviction coming in for Swiggy. But then thank you so much, Sandeep, for your fundamental views on the markets and being with us throughout. Thanks a lot and have a nice day to you.
Thank you.
And on that note, we slip into a short break. We'll be right